Hello guys and welcome. Finally, I got a transparent background. It's not perfect. We have a little white spot somewhere around there, and for some reason when I move, it also moves on me. Nonetheless, guys, thank you so much for joining today's class, and I really appreciate you guys being here. Let me get started with you guys. Alexandra G, the Queen Mode, always here. Thank you very much, Alexandra. I really appreciate you being here. Also, Givers Game, what is up? Welcome. Billy Goat Tales. Guys, if you're not following him, please go check out his X Spaces. Man, it is fantastic. They also have a new book release. You should go ahead and go check it out. If you can share that link, that'll be amazing. Army Piper also in house. What is up, brother? Welcome to the class. So let's get started. I think there's few of us, but that also opens up the possibility for you guys to request as many things as you want to, right? So don't be shy. Remember to start throwing at me a couple of assets that you want me to take a look at, and I will definitely be looking at those. So let's see. Gypsy eats an emoji. Sorry, not sorry. Love it. Gypsy also as an emoji. Nice. All right. So today, chapter number 3. I know yesterday I told you guys that we're gonna be looking at a MACD today, but I think that we already have seen a couple of indicators or oscillators at the moment, and we need to start wrapping up on how to start making money, right? So I think this is going to be one of those classes that maybe we are looking at where the gold is at, and we don't realize that it's there. So range trading, one of my favorite parts of the market. Yeah, everybody thinks that it's just a waste of time, that the market is boring, and then we just are printing money there. So let's go and take a look at my strategy. Guys, also if you find a possibility of improvement, please do it. Remember that this is just my perspective on trading, but remember, just keep adding to it and find your own way. So let's get started with the charts, shall we? All right, let's see right here. YouTube is not receiving enough video to maintain smooth transmission as such. You will... I don't know what's going on here, but let's just proceed with what we got. All right, so this is what we have right here on the screen. Guys, just let me know if this is too choppy or something. Maybe I can just do something about it. But in the meantime, we'll see what we got here. So this is where we left it out, right? So trying to front run a possible setup here, what we were looking at, and then trying to react to it, right? Remember that when we talk about patterns and range, it's pattern, right? But when we're talking about patterns, the gold is within the lines, right? So right here, let me just start ignoring this for a little second, all right? And let's see what happened here. So remember that we had, and let's just zoom out as always. Let's find first our main structure here, and we have a huge hole here, right? Then we have a little range in here or an up trending flag, and then we fell downwards here to the previous support area and also previous resistance area, right? Remember, previous resistance becomes new support. So we were speculating based on this support that we could be forming a pennant. Remember that we did not had this line here before, right? And we just kind of like eyeball it to see where could we be speculating for a bounce. Not only we eyeball it, but also we brought some support and resistances from back here, right? To start taking a look at where could we be bouncing at these stones, therefore using our brain and our eyes to start speculating on this trend line. Nonetheless, let's take a look at what actually happened, right? If you keep watching on this pattern, you'll see that we have a formation here, right? A big something here and another small formation here. This is, as we have seen, called a head and shoulders pattern. Remember, when we're trading patterns, the outer lines, that's where the gold is at, right? So what happens here? We break it, right? Let me zoom in, because this is one of those things that usually you don't see it being explained, or when you see it, it just goes below water. Look at what we got. Absorption zone, right? A hammer here. And then we trade it to break back inside. Remember what I told you when we do pattern trading. When we break above or inside, back inside, and we close back inside, we usually tend to go all the way to the other zone. But what happened here? We had an inverted hammer, right? The absorption back above. So we have absorption here and we have absorption there. Nonetheless, closing outside the box here or outside the pattern. This is a candle pattern, stick pattern that usually reveals that we are indecisive to the upside or to the downside, and that we're gonna be keep following after this disparity, following the previous trend, right? I will not be going to break a retest because this is a little more complex and can happen within, as you have seen, 1 or 2 candles. All right, so let's just keep that in mind at this point. Let me see if we have anything else. Hey, Alex, oh, crypto in the house. JB, what's up? J Violet, Harp, welcome, guys. Great to have you here, guys. Thank you so much for joining. Really appreciate it. I was saying that today we're going to be learning about range trading, where everybody else is just boring in the market. We're going to be printing money. My brother says, Alex on crypto. My brother, welcome. So handsome. Oh, man, I'm copying you. I'm copying you. I still need to get, you know, that handsome, a little white spots in here. But yeah, working on them. Maybe in 1 year, I'll get those from experience, right? So, too bad he isn't naked tonight. Oh, man. No, maybe in the future we can fix that, but not for right now. We'll still do naked charts, right? But naked trading charts. But as far as just naked, I don't think so. Not just yet. I'm not there yet. Uncle Jesse in the house. Welcome, my friend. Omar, what's up? Hey, Omar, welcome. Great to have you here. Great to see you around. JR, what's up? Good evening, OC. What is up, brother? Evening, Piper and Alex. Oh, Harp also saying hello, Jesse. What's up? So let's keep going here. What happened? Remember, the gold is in the lines. Nonetheless, when we have a head and shoulders, the neckline, which is the important part, is right here, right? At the base of the shoulders and the heads. Basically, if we break out, retest, off we go. Remember another important pattern? It is a double bottom. Deal. What we do when one of our allocations, or better yet, plans doesn't go as we expected, well, then we just let the market guide us. All right, so what we have in here, remember what we always do: lower highs, lower lows, right? So what can we do here? Well, classic trend line. All right, let's just draw it here. Perfect. Classic trend line. And as always, what do we look for? Breakout, retest. There you go, guys. Confirmation candle, and off we go. Let's look at one of our free indicators in here, and you'll see that, just like explained yesterday, what happened in here. What's happening here with the ADX? What does the ADX going down means? Let me read you guys in the chat. OC still rocking on OF. Maybe we'll see. Don't promise anything. Maybe when I'm old and I have more to show, maybe I'll do something. I don't think so just yet. I think right now what I got is just too common. All right, so let's see it at this point, right? So what is happening with the ADX, guys? Let me know. When the ADX is going downwards, exactly. Yeah, we're losing strength on what? We're losing strength on, since it's red, on the bearish trend. All right. So what's up with that? If we're losing strength on the bearish trend, we're expecting a bullish bounce, right? Not bullish change of trend. At least not at that point. All right. Where do we start looking for a bullish trend? Well, when we gain strength on the ADX. All right. Let me just disassociate this two, so I can show you. There we go. When we gain strength on the ADX. All right. ADX pushing upwards. And then we also have a bullish trend going upwards, right? So both upwards, that's when we start looking for a trend reversal. right? Just like we explained then, as long as we have a double top. So we have a bunch of things in here. We have previous, look at that, previous resistance becomes new support. So we have a pivot in here. Let's mark that pivot. There we go. And as you can see, it respected it almost perfectly. So we have a previous resistance or now new support. What's happening here? We stop falling. We have a pivot on losing strength on what? On the bearish trend, all right? So what happens? We are looking for a bullish bounce, right? It happens that we break the trend line. So when we break the trend line, what are we breaking? We're breaking the trend. The trend that we're measuring, in this case, this is a inner structure trend, right? So we break the trend, and what are we looking for? We're looking for a retest. Remember, it's not about the breakout, it's about the retest. So Alex Out Crypto says that, man, I'm taking something that everybody does, right? But hey, dude, you know, I'm the one drilling your heads with this, right? It's not about the breakout. And then you just think of me, man. All right. Having said that, let's see. I like OC style, man. Thank you so much, EDGT. I love you being here, my friend. Hopefully, you also enjoy the rest of the class. J Violet, what is up? Welcome. So let's see what else do we have in here. Support, break off the trend, right? Support or change of direction in here, gaining strength and building up a new bullish trend at least, right? Where is your entry? Your entry is at the retest after confirmation. I usually like to see one candle confirmation, something like that, and then my entry is in here. Then we set stop loss below the previous low, and then we set our wiggle room. We're gonna have a class dedicated to a position sizing. All right, when are you gonna be placing a position? When are you gonna be taking early trade or early profits? What's going to be your target, how to place a stop loss, how to measure your stop loss, and of course, how to calculate your leverage, all right? But in the meantime, you just need to know that this is our entry. So what do? Well, then we take it. We start taking profits at next resistances, right? Take profit, breakout retest. Oh, now, so maybe we can just let it in, right? Whatever we had, we just let it run. Or if you are ready, or if you didn't took this entry, this is the time for you to take the entry. This is a little bit of a difficult zone. No kidding, right? And this is part of trading. You're going to have a lot of this. Look at the craziness that is happening here, all right? Strength candles, engulfing candles, right? So what we have here, right? 3 bearish candle next to an engulfing candle. Do you guys remember that pattern? Hopefully you do, guys. If not, go check out the class number 3, trading with OC. Number 3, we explain candlestick patterns, and I show you this pattern right here, right? So usually indicates that we're gonna keep going forward to the upside. And yes, we did, but what happened technically, right? Technically, that is our entry point, right? At this point, you can take the leap of faith, which I don't really recommend, and enter on your supporting here, right? Go for standard lows or previous lows, right? Right here. Give yourself a wiggle room. That's why we give ourselves a wiggle room. And then we trade it. Then first candle closing in the green, both candle or shadow and body, that is when I decide to move my stop to entry. And what happens, wicks down, takes me out on profits, and off we go. Did we lost anything? Not at all. Why? Because also we hit our TP number 1. Why do we hit our TP number 1? Because that was our previous trend line. All right. So we always take early profits exactly because of this, right? So right now we can see in action management of your trades and of your risk, known as, of course, risk management, right? So I know this is a little crazy, and you're gonna be having a lot of this, especially on lower time frames. When we're talking about 3 minutes, 5 minutes, you're gonna hit a lot of this kind of volatility, especially when big guys start talking. And yeah, I'm talking about US government officials, all right? So when we have this, well, what happens? It just takes you out. What you do, you just wait for breakout, candle retest, right? And that's your next entry. Confirmation, full body candle in week open, and maybe you can enter right there for an early profit taken. So that's what we do. Where can we start calculating maybe support and resistances? Somewhere around here. Look at that, top, bottom, bottom, bottom. What else do we have? Maybe somewhere around here. All right, so that's gonna be our range for now, or our setup for the next trading setup. All right, so let's go for long position. We're at candle close. We go for previous lows, right? And then we give ourselves wiggle room. We aim for this topping here, and then what happens? Well, then in this case, we go up, full body candle in wick on profits. We move our stop to entry, and damn it, look at that once again, right? But that's fine, don't worry. Now we're defining a new low. What happens? In this case, most likely you were not able to take this one, especially because right now we have a downtrend on your oscillator. Yes, we are gaining strength. That's why we're slightly ranging upwards, right? Until when? Look at that. We lose the trend in here, and something interesting is happening here. Do you see what is happening right there? Let me just clear this up. Could you identify this as a pattern? This is a range, right? So this is exactly what we're going to be talking about, how to locate those and how to trade them. Because they have the little ups and down stuff, and I want you guys to show you how do I trade them, how do I use hedging on my benefit, and also how we mitigate losing. Because guys, if you were waiting for the holy grail of trading, what is the key of winning? Let me know if you know. Yeah, the key of winning, revealed right here, right now, it is not losing. All right, I know. You may be thinking a couple of stuff, and my ears start just ringing so bad. I bet you're talking to me. All right, so what do I mean with not losing? Just don't go ahead and, and start swearing at the screen, because not losing has many other things in it, right? Remember the chart that I give away on chapter number 1? Guys, if you don't remember that, go check it out, because some of you guys gave a super chat, and I also gave you my setup on how to enter. So not losing, it is, and it's right there on the Google file that I shared. All right, seems like we went out for a little second. Don't know what's happening here, but the Google Drive that I shared, it says not losing implements entering for a long on big supports, entering for a short on big resistances, moving you stop to entry as soon as possible, taking early profits, and of course have a risk reward ratio right there. Also manage your risk. But basically, those are the points of not losing. If we start looking at this as how to trade, well, then you'll figure out that yes, maybe at the beginning your profits might be cut a little bit, but you're gonna be on the size of winning and incrementing your wins over and over and over. So what happens in here? Let's just finish this up. We're losing strength. You see that? Losing strength. We are over on the bullish trend. What we do, well, then right here we're going down, and we are not expecting a bounce up. Why? Because at that point, are we bullish or are we bearish? Let's just look at our oscillator here. Let's use this one. At this point, well, then you can see within a couple of candles, there we go, and we're not even breaking it so far. We are bearish, right? So what happens here is not about your breakout, it's about your retest. What happens in here? We are gaining strength on our ADX, and we're still on a very bearish trend, right? Enter here, you go back down, full body candle close in the green, take early profits on previous support and resistance, and off you go. What happens? we keep ranging. So let's go ahead and dive fully into the range trading. And for that, let me show you a couple of things in here, which we're gonna be using to guide us. This is gonna be Wyckoff from the Binance Academy. At this point, you may already know that I like how Binance oversimplifies stuff, all right? And sometimes that could be not too good, but in this case, I think that will be especially good, right? So one of my favorite setups is gonna be this one right here, the accumulation scheme, all right? Then what I do, I read it, and then I also swap it or turn it around. What happens if I turn it around? Look at that, almost exactly, but now it's called distribution, right? The main areas of this pattern, it is that we can have a approximate 70% chances of ranging if we can early identify it. What are the key points in here? Coming down, look at the PS point. That is a little range, usually represented as a little range. V-shaped recovery right here. And that V-shaped recovery will indicate you the inner range, right? We don't really care much about the inner range. That is going to be our profitable zone, all right? Where we start taking some profits. What we really want to get, it is the outer range, the secondary levels, right? Why? Because we're going to be, what? Selling the top, right? And buying the bottoms, right? It gets a little bit challenging when we get in slightly up ranging zones or slightly down ranging zones, but I'll show you how I manage those, all right? So let's get it going and handpick a couple of stuff in here so we can start analyzing. Let me go to the 4 hours and let's go back in time to the previous cycle. Why? Because right when we were changing or ending that cycle, a big range happened there that it was very complicated to trade. But if you knew how to trade it, well then, I think you will be golden. By the way, coming down, range, V-shaped recovery, high on higher than the previous range, and that gives us 70% chances of ranging. You see how simple it gets once you know what you're looking for. That repeats over and over and over, even the other way around, all right? If we see this the other way around, coming down, right? Remember, we're going to be imagining this the other way around. Coming down, little range, not quite a V-shaped recovery, but there we go. That gives us somewhere less than 70% because it is not perfect, but nevertheless, we do range right there, all right? Let me find that range area very quickly before we move on. There we go, this is it. We have, by the way, 3 areas of ranging, all right? The first one is not that beautiful. Nonetheless, look at that. We do have a range, V-shaped recovery, the high, not higher than the previous range. We know where we're looking for, right? Then, what do we start looking here? Just so we know whether we are slightly ranging downwards, right? Slightly ranging upwards, or flat ranging, we're going to be using one of our oscillators in here, right? What we want to see, it is where is it loaded from, right? Yeah, this is going to be a little bit of your perception. There's not an exact science, but look at this. For example, if I start just pushing my ADX, let me grab it here and pairing it, all right? Once we identify that we are ranging, right, we want to see where are we heavy loaded, all right? So far, we are heavy loaded to the downside. Yes, all the way here, we're heavy loaded to the upside. And what happens? Well, then we keep moving forward to the upside. If we start seeing something like this, this is pretty much self-leveling, right? So if I just take into consideration that little space, you'll see that we pretty much are flat on that area. You see that? So, despite these areas of flatness, what we want to first identify are areas of loadness, right? Or basically where it's loaded, right? So in this case, it is bearish loaded. So I'm going to be looking for a slight tilted downwards range, right? All right. If you like better, the RSI prime that I show you guys, we're also going to be looking at something like that. So at this point that we know where are we, what are we going to be looking for? Again, our center line. Where is most of the action? Most of the action is just not even in the center like in here, right? And look at that. When we are at the center, again, we are flat ranging, right? Also, when we are equally top, bottom, and right here we're slightly losing it, right? So you'll see that this is pretty much also a flat range with a slightly tilt to the downside, right? Slightly tilt to the downside right here. Same thing we're going to be seeing here, right? We don't really care if it's slightly tilted, right? We want to see heavy disparity, so we don't get stopped out over and over and over, right? That's what we are looking for. So at this point, look at that. Most of the things, they are not even within, let me just clear this up so we can see it much better. They're not even within these boundaries. They are absolutely bearish and pushing it heavily bearish, right? So I just like better RSI prime. For me, it's easier to understand. I mean, I just can have a glance at it and I have an answer right away. But if for you, the squeeze momentum works the best, please be my guest and use the squeeze momentum. Whatever works the best for you, right? At the end of it all, we want you to make money. We don't want you to copy whatever it doesn't works for you, right? Every brain is wired differently. All right. Now that we kind of understand how to see whether we're going to be ranging or not, let's keep following this. Coming down, range, V-shaped recovery, high, not higher than this zone. Right here, we can start adding our lines, right? We're going to get started with this high right there. We cannot ignore the range size. So what I'm going to be doing is looking in between the lows and the highs. This is going to be defining my top range. Maybe I can use, look at that, these other lows between this other line, between this other high. Kind of look at wedging in that trend line, right? As you can see, I find my upper range. You see that? Perfect, upper range. Now, and this is just as I identify that I'm ranging, right? Now I look at my oscillator. Oh, I'm heavily tilted downwards, right? And let's also just use whatever we had at the moment. Right here, that's where we're looking for a range, right? What are we? Heavily loaded to the downside. All right, let's think that we're gonna keep pushing downwards in here, all right? So I can compensate based on whatever other areas I have. This is gonna be a waiting game. So what I'm gonna be doing here, adding or finding my next low. Usually my lows are after or printed after my V-shaped recovery. In this case, I had a double bottom, right? Since I have a double bottom, I'm gonna be looking my second low and just for good measuring, losing my next pivot here, all right? Once I see that, I can start adding some lines where it makes sense for you, somewhere around here, right? And I think you're using the wrong tool. There we go. I think this is going to be much better. Here we go. And then, of course, the bottom or the absolute base of those, I have my lower range. This is the zones where I'm going to be adding or entering my shorts and longs. Don't worry if you get different stop losses. It's just part of the game, and we're going to be adjust them as we go. So what do? I wait till I get in here, right? Long position right here, set up my stop loss right here, and then I need to add a wiggle room. All right, my wiggle room, we'll explain it in a minute, but at this point you just need to know that it's an extra space. All right, usually this is how I'm gonna be calculating my wiggle room. In fact, my wiggle room will be a little bit lower, and I'll show you why. But now, since I know I'm heavily loaded downwards, what am I gonna be doing with my stop loss? Yes, I'm gonna be giving myself a little bit more space. How do I do that? Well, then I can go back in time and get supports, and resistances. All right, there we go. I'm going to be adding my stop loss to the very first support in here, and then I'll add my wiggle room. Remember, I want to be at least above 1. Then where do I start taking my profits? I'm going to be aiming at this lower range. Yes, I could be aiming on top, but I don't know if this is going to be playing out extendedly, because remember, at this point, I'm loaded to the downside. Is it too loud? Let me know. Maybe I can just drop down a little bit of my music. There we go. Maybe 13 is good. Let me see. Hey, username in the house. Welcome. Laser, what is up? Welcome. Who else we got? Who am I missing here? I think that's it, right? Perfect. All right. So that's going to be my setup. Now, let's dive in another important case. How do I measure my wiggle room? Guys, this should be another class, but let's just give a quick glance on how do I calculate my stop losses, all right? So, when I look for my stop loss, I'm always going to be looking for my next support if I'm on a long, all right? And then I want to add an extra space. How to get that extra space? Usually want as little as possible, right? As tight as possible. But I also don't want to get like this and then get stopped out for a cent and then the damn thing goes up, right? And guys, it's gonna happen to you as you start adjusting for the volatility on your asset, right? But here is how you start with the right foot in here. The first thing that you're gonna be doing is adding your stop loss to your first support. That's it, all right? The next thing, which is the wiggle room, is going to be a localized volatility calculation. Remember when we talked about candlesticks, all right, in candlestick patterns. This right here, it's called the shadow or the wick. Oh man, it's just going back and forth, right? This thing, right? The little pole that goes through the candle, right? This means that the price action went all the way up here, but was not able to hold it. That is volatility, right? You can see how volatile this is, or this candle was, right, at this point. What I want to see, and let me just zoom out so I can use properly a tool and it's not just all wiggling and not perfect. I'm gonna be measuring the average of these shapes, right? And I'm gonna be making it by eye. All right, for that I'm gonna be using a price range tool. So first I'm gonna be looking for an average to my eye. All right, I don't want to grab the largest one. No, I don't either want to grab the smallest one, like in this case, right? This is a no. You want an average zone. So let's get started. Let's just start with this one. Yeah, it's a little bit big, but look at that. That is the its size. And look at this next one. Well, that is a little bit smaller. So what would the average be between those two? Just by eye, I'm grabbing an average size position. Look at that. Maybe this is even smaller. Let's bring the average a little bit downward here, right? What is the next one? Even smaller. So maybe I can draw it back down. And I think that will be the average size between the small ones and the big ones. And look at that. I can compare it. And they should be fitting, most of them, very, very close. Look at that. Fitting it very closely. Fitting it very closely. This one, well, kind of, right? Not really, but look at this other one. Perfect, right? Which other one? This one, kind of. This other one, very closely. You see? This other one, very closely. So I'm confident that I have my average size. I can even adjust it a little bit if I wanted to, right? But that's going to be my wiggle room. This is the volatility that I could be expecting at a given time right here. So I'm going to be just giving it that extra space to my stop loss. All right. So this is the way that you calculate your wiggle room after you set up your stop loss limit, if that makes sense. All right. This is giving you that extra space, so when we have, or if we have a big push through, well, the overextension doesn't get you. All right, it's just a safety precaution here, right? So we're gonna be adding it. There we go, and that's gonna be my final stop loss, right? Feel free to change this a little bit bigger, a little bit smaller, however you like. Remember, you are the king of your charts, right? If something doesn't feel right, make it feel right. All right, so now that we have this, right, and we have a setup for our stop loss and our wiggle room, that's when we start jumping to the trade. So this is going to be our first trade, and then TP number 1 or 50% out right there, our hard limit. Will we be making more? Absolutely. But we're not here just now to push the limits of what we can earn. Right now, we want, once again, to get the holy grail of trading, which is what? What's the key of winning? Not losing. That's what we are after at this point, right? All right. Now we are in taking profit 1. This is going to be 50% out of my long. My long, it's going to still be open. All right. I'm going to leave my long open, but be taking 50% out. All right. At this point, I just wait for the first crossover. There we go. I'm going in. Let's not even call the best case scenario. Let's go for the worst case scenario even here. So short at break above and then going back downwards. And then what do? Previous high and then give myself a wiggle room. I already have some sort of calculation. Does that matches? Yeah, pretty much. But can I add it right here at above? Yeah, look at that. So I can even adjust it a little bit more. There we go. That's going to be my wiggle room for these trades so far. All right. That's what I open my trade. All right. That is my wiggle room. Where do I aim? I aim at the base of my range entry. All right. What happens to the price action? Goes back up. What do I do? If I see this, in this case, because it's a range trading, we're not going to be doing anything. Goes back up. Takes me out. The reversal coming back down. I know I should be reopening. So at this point, I am with a slight loss because I got hit once. All right. Not too bad. I'm going to be reopening this trade because I'm still in the game here, right? So I'm going to be cloning this. Where do I enter? After I have the absorption zone at my entry point, right? And then where am I going to be aiming to? All the way down there. What happens? I cash out 50% right here, which not only covers my previous loss, but also give me a little bit of profit. All right. What's going to happen now that I'm here? What's happening right here? Right. So this is a little bit of a caveat. Remember when we start looking for where we heavily weighted at. All right. So we need to understand that we possibly gonna be going lower. All right. That's why we also have our other stop loss and support and resistances. At this point, we don't know, but what we're gonna be doing with this long, let's add another 50% into this long. All right. Where? Right here. Let's clone this. We enter somewhere around here when we finish going downwards and we start going upwards. This is our same entry. Exactly the same entry. What happens here? Look at that. Do we get stopped out? Yes, we do. We're still on profits. All right. We are still on profits. What happens here? We go back into our entry point. This is something that we need to calculate now. All right. Remember that we're going downwards. This is something that you just do in your head. All right. Guys, remember, this is a hard to trade range. I'm going to be showing you another ones that are just very easy to trade, right? And that's the ones that we are going to be trying to trade the most. But I want you guys to be prepared, right, when the beast comes front to front to you, right? So I want you guys to know exactly what to expect and how to defend yourself on the worst case scenario. That's why I'm handpicking a very difficult range to trade, all right? Right now we get stop loss or stopped out, right? So what do we do? Right now we already have 1, 2, 3, 4 trades in, right? And we can start using another tool that we looked at before. Remember which tool was it? The regression trend. We can just grab it from here, pushing it all the way here till we get stopped out. There we go. And we have a decreasing range. This is just gonna be a visual indication, and that is because, let me show it to you right here. You will start pulling it as we go, and it's gonna start fitting way better. All right, but in the meantime, let's just get rid of that tool. How do we calculate this disparity? Well, what is the difference between our low and our next low, right? So now we know that our entry should not be defined right there. Should be defined lower. How low? We hit this low support. We hit this low support. So my next entry is gonna be here or here as I'm bouncing from the support. Right? And what's gonna be my TP now? Previous support becomes new resistance. Right? So let's do it. Let's go right here. Our support, our wiggle room. Let's grab our next wiggle room here. Look at that. We even need to give it a little bit more in here. What do we do? Nice. We take this, right? At this point, since we're going lower, now we're using our tool right here. Remember, we're using everything in conjunction. Right now, we're here, right? So now that we have flat supports, what are we going to be trying to do? Well, then our 50 in, 50 out is going to be needed to wait. And why is that? Because we need to define new entries lower, all right? So this is going to be a little bit more difficult. Remember, this is the difficult part. Don't worry, we're going to be seeing much easier, right? Also, remember, we're forgetting to do something interesting or something that we must do, right? Right now, we are basically trading blind because we're not using our oscillator. We should be using our oscillator. What happened in here? Tiny candles, reversal, right? So just by our strategy, we mitigated the slope down. But if we add the confluence, what is the confluence? Tiny candles. Beautiful entry. We would have, man, a perfect entry. Look at that. Where do we take profits? Tiny candles resistance. Perfect. Let's go now and use all of our tools, right? So go back down. Oh, support. Where do I have my tiny candles? Right here. My entry goes right there, right? So let's go for a long entry. What do? I measure my stop loss and come on with this stop loss. You need to be kidding me. Right there. And we already have the increment of my wiggle room right here. I do increase my wiggle room. There we go. Take my profits all the way at next resistance. And we open up a short as we have on previously, where one more candle to my right, two more candles right there on more tiny candles in here at the resistance, full candle confirmation right there. I don't know what the hell is this going or happening. There we go, setting my stop on previous highs in here. And since we're not dropping that far, I'm gonna be using my wiggle room from here. There we go, and off we go, guys. We had 1, 2 stop losses, and that's because we were not using our oscillator. You factor in your oscillator here, right? You factor in your range, right? And after the 1, 2, 3, 4th point of confluence, that is enough at this point. That is enough at this point, right? To what? You have enough data to predict a good enough channel downwards. What happens here? Well, then you are either you're bullish or bearish. You take your trade, you take your profits there, because at this point, since we are heavily loaded downwards, right, we're gonna be taking it. And where do we re-enter? Tiny candles. What happens here? Bearish flag. What happens? We try to maybe grab the breakout retest. We can't. And then on the breakout candle, topped out, reverse trading, and off we go. We successfully broke the range. This, for example, is a next range. It's easy peasy, lemon squeezy. Why? Coming down strongly, right? Then range. Man, tell me that you cannot see that range, please. So now the range is giving us what? A possible scenario, right? Right now that we know what we're looking for, we're gonna be measuring this range and just pushing it like that, right? Let's let it see our V-shaped recovery. Look at that. Respect this high, not high in the previous low here. What we got our entry zone at the top. We got our main range right here, right? And we have our next entry zone at the bottom. Easy, easy, right? Let me show you something here on this difficult range. How many trades we made? Remember that? Let's Control C so we can be accurate about this. All right, perfect. This is what we got. Let me show you why I love range trading. First trade successful from here to here, right? Let's just move it out of the way. Let's push it here. First trade. Second trade successful from here to there. All right, there we go. One stop loss. What is the stop loss size? This one. All right, then what's next? This trade successful from here to there. All right, then what happens? Another trade successful from here to there. There we go. Put it here. What happens here? Do we get stopped out in this one? Not really. Another trade to the upside, right? From here to there. And then finally, one more trade from here to here. From here to there. That's it, right? That's it. Now, let's measure what we lost. Let's just say like we missed out something from here to here, because that's where we start looking for another entry, right? Or if you even want, I mean, we'll just compare it fully. So that is the movement. What's happening here? We have, let's just be fair, put it here, put it here, put it here. And this is our wins. Put it there. Put it there. And then let's subtract twice, because we got hit twice, remember? Once. Clone this. Tell me that I can do it. Perfect. Twice. All right. This is what our range trading made. Let's even go for the worst case scenario, right? That we missed all of it, right? Look at that. Did we? Look at compare, knowing having a strategy. What was our profit? Oh, by the way, look at that. I'm even missing one of this. All right, from here, because this was our stop, right? So, did we miss anything? No. Man, is this impressive or what? Have you ever seen this comparison? How our stop losses, even included our stop losses, right? Our gains based on range trading versus the actual dump. When everybody is distracted, saying, hey, what a boring market. You're just buying low, selling high. Buying low, selling high, right? Buying low. On this one wouldn't work because it's gonna be the same one. Buying low, selling high, right? What else? Buying low, selling high. Buying low, selling high. Let me show you just to wrap things up. In here, some quick options in here. In this case, when we're not having troubles like we did in here, like when we're not heavily weighted, remember, as long as we are within the box, we are not weighted, right? We are ranging. In this case, we just hedge. We keep our trade open, and then whatever it breaks, you are in with 50% of the gains all the way down, right? And then what happens here? Again, beautiful range. You see? So you can see how usually we do have flat ranges, right? And then in many cases, those poor ranges, they are, yes, complicated to trade sometimes if you don't know the strategy, right? But at the end of it all, they can be managed. All right, I think that's gonna be it for today, guys. If I could be placing of importance strategies, I would place this one at the top. All right, we needed to have a little bit of introduction on what is trading, what are we going to be looking at, so on and so forth, and how to trade with naked charts, basically no indicators, right? And then adding an oscillator just for further confirmation. After that, man, chapter number 2, which is not an oscillator because usually it's such a great help to use an oscillator, right? So chapter 2, most important, range trading. So guys, save this video for later. Share it with somebody that needs to see how range trading can improve their trading abilities and take everybody by surprise. So make everyone distracted, your liquidity. All right. Other than that, guys, thank you so much for joining. And as always, see you guys tomorrow.